morning, everyone. I'm Michelle He. I'm the CEO and the co-founder of Abound. Some of you might have heard about it, some of you may not. Abound is a London-based AI-driven credit technology company. Our mission is to expand access to affordable loans. I set up Abound with my co-founder Gerald 4.5 years ago. That was right in the beginning of COVID. We had a lot of interesting stories. We did this because we strongly believe that there is a better way to do lending and to make lending decisions than just using traditional credit score. We have a lot of more data now, and the infrastructure is so much better. But most banks, if not all of them, are not using the data effectively and smartly to make better decisions. So we set up to change this. Again, in the beginning of COVID, we decided to use AI and open banking to transform the way how lending decisions are made. We also believe that the best way to do it is to set up our own digital lending business. So we built a new technology, we prove it works, so we set up Abound. In 2021, after we got the FCA approval, we launched the business. And since then, we have proven that this works really, really well. We lend over £500 million so far, and our performance is way better than the market average. We built a profitable business 2.5 years, a profitable FinTech business 2.5 years after we launched the product, and we have raised 1.3 billion in total to scale the business to help more people. Now, we are taking our proven technology called Render to enable other lenders to make better decisions and to help more people. That all sounds very cool, isn't it? But all of this comes from my humble beginning when I first came to the UK, and I was about to share that with you to provide more context of a long-standing problem the credit industry has. And I'd like to give some examples, including my personal story. 14 years ago, I came to the UK after I finished my PhD in AI in Singapore. I came here to work. I had a job offer, a job secured. Despite having a decent job and a solid educational background, no banks wanted to lend £5,000 to me. Why? Because I was credit invisible. The traditional lenders still rely on credit score, which are a Stone Age technology. The scores depends on someone's credit history and created a chicken and egg problem. If you don't borrow in this country, you don't have a credit history. But if you don't have a credit history, you can't borrow. So for a lot of immigrants and newcomers, that's just an impossible barrier. 14 years later, even today, nearly all banks are still relying on traditional credit score to decide if they should lend or not lend to people. I know this because before founding the business, I spent over a decade helping big banks to improve their credit decisioning. Unfortunately, it's all around the traditional credit scoring ecosystem. One day, I woke up and told myself, if I continue doing what I was doing, I can't even help people like myself when I first came to the UK 14 years ago. And it was very, very clear that there must be a better way to make lending decisions. The answer is data, technology, and to smarter using data and technology to make better decisions. When open banking came to life, my co-founder and I were very excited. We saw this as a unique opportunity to transform lending, so we quit our very comfortable corporate life, like what Jackie did. We set up Abound. We use open banking and AI to understand if the customer can afford to borrow instead of treating them as a walking credit score. Let me go down a little bit more to the problem and give even more context. Credit enables some of the biggest moments in our lives. For example, when we get married, when we move house, when we start a business, and indeed, when we move into a new country. But in the traditional credit world, you need a UK credit score to borrow in the UK. Again, for newcomers and immigrants, that was impossible. Two of our Render clients, which is our B2B clients, showcase this. We've partnered with Gaia, which is an innovative IVF insurance product. Their members only pay the IVF, which is very, very expensive to go through IVF cycles. They only pay for the cycle if it's successful and if the parents already have a baby. And we are working together to allow their members to spread the expensive IVF cost. That removes some of the financial burden of going through this difficult and extremely emotional process of having a baby. We are also working together one of the biggest remittance fintechs. A large portion of their customers are immigrants who are working in the UK. We are working together to help those customers when they need a loan. That's the technology we use and how we help other partners to make better decisions. At Abound, we call customers with limited credit history as thin file or credit invisible. And many of them are ethical minorities, young people, and women. Those group of people struggle to get affordable loans because of how the traditional credit scoring system works. They are either rejected, computer says no, or they are forced to borrow at a higher cost. For example, Credit Karma's research shows that women pay $17,000 more to borrow in lifetime because of the gender gap in credit score. £17,000 is a lot of money. You can make better use of that money, much better way. And just in the UK, millions of people are unfairly treated by credit score, and there are many, many more globally. So I was not alone, and this is a very big social problem. To solve this problem, we built a radically different technology. It combines open banking and AI to understand the customer's true affordability. With the customer's consent, we read the real-time bank transaction data. We analyze how much they earn, how they spend the money, and how much is left every month. This way, we can make responsible lending decisions based on if they can afford to pay the loan back. The technology we built is very powerful. It allowed us to serve 6 times more people than we would otherwise do if we only rely on traditional credit score. It helped us to achieve a 70% reduction in default rate versus the market average, 70%. What it means is that if the market thinks our portfolio should have 10 people in default, we only have 3. So we proved at a scale the technology that we built in-house is transformational. Our AI analyzes the customer's bank transaction data. It doesn't matter if you are an immigrant, a student, or a woman. If you have financial stability and can afford it, you are more likely to get credit. We take a detailed financial X-ray of individuals, not just to rely on statistical averages. The flip side is that while we are picking up more people who we should be able to borrow, we also spot those who we shouldn't. Some people may have really good credit score on paper, but they may not be in a good financial situation. For example, some people who are experiencing serious gambling problems and are continuously borrow to gamble. In summary, our technology helps people who are unfairly blocked for accessing affordable loans, and we also identify those we shouldn't lend to. It's a win-win situation. The journey from being declined a simple loan in the UK to a fintech founder has taught me a lot. It showed me how innovation often comes from personal frustration and from understanding the real-life challenges. It motivates me to focus on building a sustainable business so that we can scale the solution to help more people. Looking back now, I'm really proud of the humble beginning of my UK journey, and I'm proud that along the way, I may have contributed to break down some of the barriers. Thank you.
I've got plenty of questions for you, but I'll go to the room first. Are there any immediate questions for Michelle? We have one at the front.
Michelle, I completely understand your frustrations having moved over myself, even opening a bank account, let alone trying to get credit. So I really think it's great what you're doing, making it more accessible. But that 70% decrease on the market average in terms of defaulting loans is exceptional. I'm really impressed with that. Without giving away proprietary technology, just out of curiosity, you said there's so many more data points now from years ago. What are some of those unique data points, or is it more just the AI recognizing patterns of behavior in terms of assessing whether those clients are due a loan or not?
Yeah, it's a very good question. Thank you very much. So there are a lot of data which is available. In the traditional world, who people rely on credit scoring, they are relying on people's past behavior. It's mostly based on who have you borrowed money from before in the country and how have you been paying other people. This is the main decision factor when it comes to credit score. They have a lot of other things as well, but this is the main decision factor. The main, we use a lot of more data, but the main data we use is the real-time bank transaction data. It's enabled by a very powerful ecosystem called open banking. So the customer consent, they send the instructions to the bank. The bank will send their all the real-time bank transaction data, the historical data to us. It came back to the past 5 years. We take the last 24 months. So it's a very secure ecosystem in the way it's secure for the customers because they don't give us the login details. They send the instructions to the bank. And it's very reliable for us because we go to the data directly from the bank. So we don't questioning. We don't need to check if the data is genuine or not. So first of all, to have the data, the raw data, is a really big thing, which was enabled by the open banking ecosystem, but that's far from enough because the data was already there. Big banks already have a large portion of bank transaction data, like 20 years ago, even though they only have their own data. The really powerful thing of our technology is, number one, we will be able to process all this kind of information because those data, although it is very rich, but it's super noisy and unstructured. And what we were able to do is to translate the noise into the signal and to identify, to translate it to a sensible, like a lending decision if we should lend it to the customer or not.
Okay, got time for one more question down at the front.
Yeah, thanks very much for the talk. Does your technology apply to sole traders? And if so, how does underwriting a sole trader business different from underwriting a regular consumer?
Oh, that's a very, very good question. I will give you what I know, but I'm going to point to our head of partners, Sam Powell. Do you want to stand up? Because do you want to stand so that people can actually see you? Because we are actually talking to, as we speak, we are talking to one of the newer banks to help the sole traders to get a loan. In a way, it doesn't really much difference from the technology perspective because the sole traders have their bank account. What we do is that we process the bank transaction data to identify the income, the quality of the income, and the expenses. And another thing is that the technology is agnostic in terms of the asset class. We currently, on our own digital lending, we do unsecured lending, but actually the same technology can be used for mortgages and asset or car loan. The reason is because when someone is getting a mortgage loan, you also need to understand the customer's affordability. And the cash flow underwriting, the cash flow analysis is the same. As long as you have the bank data and going through the technology, we can process it in the same way.
Okay. Thank you very much.
But feel free to talk to Sam Powell if you have more questions, because we have a real, a live use case now.
He's the man in the know. Okay, thank you very much for the questions. And thank you, Michelle, because I think everyone professionally, it's fascinating to see how this technology can work, how you get something like this off the ground. And then personally, I'm sure every single person in this room has had to have a challenging conversation with their own credit score at some point. So, Michelle, thank you very much indeed. Thank you for joining us at FinTech Live London.
Thank you.